My guest of the day gave us a brief precursor into what's going to happen today in terms of conversation. And I'm very pleased to welcome back onto the show Prateek Pant. He's Chief Business Officer, WhiteOak Capital Management. Prateek has over 25 years of experience in the banking and financial services business in India, as well as the Middle East. And his role is stellar right now, driving the overall business objectives at WhiteOak through multiple distribution channels, innovative marketing strategies, including digital and effective product architecture. And if you want to know his background, he's actually an engineer with a specialization in chemical engineering. He also obtained an MMS degree from the Bajaj Institute of Management, Jamnalal Bajaj Institute of Management Studies, with a specialization in finance. Great to see you. How was the weekend?
Weekend was brilliant. Luckily, not too much of rain, so could catch a game of golf, Hrishi K.
Oh, nice. Wonderful. WhiteOak Capital Management is launching the WhiteOak Capital Flexi Cap Fund NFO. For all of you who are listening or watching, 12th of July. It's an open-ended dynamic equity scheme. It will invest across large cap, mid cap, small cap stocks. What makes this NFO an attractive opportunity to investors like you and me? Prateek, I've got to ask you that. The WhiteOak Capital Flexi Cap Fund. Give us an introduction.
Sure. Thanks, Hrishi K. So I guess, WhiteOak Capital, as you did briefly describe, was set up in 2017 by Prashant Khemka, right? A first generation entrepreneur who had spent almost 2 decades understanding markets, initially at Goldman Sachs, and then now, of course, at WhiteOak Capital. So the whole DNA of this firm, which has been set up right now, is that of an investment management professional, right? So, and that's why we have a strong 35-member team even before we launch our first particular product. Now, what does help us is that this gives us a lot of understanding of business cycles. The team members have been in different markets over a period of time, have looked through different cycles of investments. The whole we have a strong philosophy which says that we want to invest in great businesses at attractive values, and we do that by a proper valuation framework, which I briefly referred to last time around, which is called the OpCo-FinCo framework, which actually looks at valuing the operating side of businesses rather than capital, right? And that's helped us. Traditionally, people have used models like price earning, price to book, which are more historical values. But we actually look at businesses which are going to generate cash going into the future, and that has helped us in creating outperformance on our existing portfolios. So, incidentally, WhiteOak Capital group companies manage more than 40,000 crores of assets today, and have a phenomenal track record of creating outperformance to benchmarks all through that period. Now, we've been in fairly volatile times, Hrishi K, right? Last 6 months have not been the best time. There are a lot of fears in the market. Interest rates are going up. There's inflation. After stellar last 2 years, despite the adverse economic conditions because of the pandemic, the capital markets actually did quite well. And from beginning of this year, people have seen erosion in values. However, what we see, interest in India, companies have actually been quite resilient. Our balance sheets have become quite strong. Even when you look at recent data which has come out, you see the services PMI, even the general consumption data. Try buying an air ticket today, by doing hotel reservations, travel, booking a car, anything. The consumption demand continues to be strong, and that is actually reflecting in the earnings of companies. So, from a time perspective, we of course have always, I also explained last time around, we don't believe in timing markets. We don't believe in taking macro calls of market. But when you have deep price corrections and good quality companies which are available at discount, it's a great time to start building your portfolio. So to your simple question about why a flexi, so a flexi cap fund is actually you could say it's like a 1.0 of the mutual fund industry, right? It's a fund which has no biases, around where it can invest. It can invest across sectors. We could invest across market capitalizations, the large companies, the smaller companies, the mid cap companies, and at the same time, you know, uh, investing over a period of time into this through your systematic investment plans or systematic transfer plans can help you actually get entry position into the market when some good quality companies are available at fireside sale, if one may say, right? So I guess all of this, the pedigree of the investment team which I just spoke about, the solid processes which are there in place, and at the same time good values available in the market, makes this a compelling story, Rishikesh.
Wonderful. Now, you answered brief portions of my next question, but I'd still like you to underline it. How is this Flexi fund different from the other ones in the market?
Yeah. Maybe the question paper leaked to me, but so it's as I said, there are 44 investment management firms, asset management companies which are already there. Almost all of them do run flexicap strategies. I guess the big difference, as I said, at WhiteOak Capital is, we are not a bank, we're not a broking company, we're not an insurance company, we are not a fintech company. We are a pure investment play management company, right? Run by investment professionals, the DNA of an investment professionals. So I guess that really talks, and investment professionals who have very solid pedigree, skin in the game in running this type of a business. So that makes us very unique as a new entrant which is coming into the market. The second aspect, as I said, is that we have a track record of running a flexicap strategy in our PMS, portfolio management services which we've been offering, and also what the products which we've offered to our international investors for 5 years within WhiteOak, and Prashant has had a track record of running the same in Goldman Sachs for more than 15 years. So there's a 20-year pedigree and track record of running flexicap India funds, and that has shown, the type. We're pure active managers, Hrishi K. We believe there is, while of course a lot of people do talk about passives today, but in our mind we believe there is a lot of alpha to be made or outperformance to the benchmark, because there's still a lot of information asymmetry in the small and mid cap companies. So if you find the right bottom up companies, you can actually outperform the market significantly. And all of this, as pure active managers, investment managers with an investment DNA, right, and 100% skin in the game, is what makes us fairly unique, Rishikesh.
Now, treat this as you talking straight to potential investors. What kind of investors should invest in this scheme?
So I would think that, we've seen equities has a long term, as they say, right? The eighth wonder of the world is power of compounding. And compounding only happens when you come in early. So I would really urge a lot of youngsters who are looking to build up an investment portfolio for the long term to get in as early as they can. The advantages of compounding really comes in when you can give those many number of years to a fund. See, typically the markets do deliver, equity markets over a longer period of time have given double-digit returns. But one should be prepared to ride the volatility. We just spoke about this, right? That the first 6 months this year have been a lot of reds in your portfolio. The last 2 years were spectacular. So if you have the stomach to have this type of volatility, then coming in a diversified equity fund is a great way to get exposure into equity. And that is exactly what a flexicap fund would do. However, you must consult your investment advisor and check with him in terms of, because everyone is at a different stage of life. So you need to be able to see what type of exposure would you like to take to equity versus debt versus gold, and then accordingly do an allocation to one particular fund.
Yeah, but the fact that an individual investor would do well in investing in the long run, that can't be overemphasized. I mean, that's something you feel very strongly about. I'd like you to add on to that.
Sure. So Rishikesh, when you look at the other option is a lot of conservative investors do look at fixed deposits, right? But, and inflation, which is a topic which is now being talked about not just in India but across the world, eats away all your returns, because if out of the 6-7%, the inflation itself is 6-7%, you're actually earning 0 to negative returns on all your debt instruments. Doesn't mean that you don't put money into debt, but the role out there has to be limited to preserving capital for shorter term needs. If longer term wealth has to be created, and we are in India, right? India is a great story where when you look at nominal GDP growth, which is your inflation plus actual GDP growth, you had 12% plus type of returns. We've looked at 30 years data in India, and the benchmarks have delivered 12 to 13% returns over 30 years, year on year, right? And that compounding takes you to how much? So wealth creation cannot happen by putting money into fixed deposits. Wealth creation can happen by participating in the equity growth story of India. And equity mutual funds actually offer you probably the best platform to make those investments.
Let's talk about investors approaching risk. How does one determine one's risk appetite and approach risk?
Sure. So it's a very, very, very critical point. So risks can be multifold. So there is liquidity risk. There is risk of capital at points of time. And, it's like when you need money, do you have that money in your bank account, right? And that is the reason you have to be able to understand risk is equal to volatility in your portfolio or the type of negative returns which can come at any point of time. Now, for each person, risk is very different. For someone who's starting off his journey, he sees he's got 30 to 35 years of productive, corporate journey out there. And for him, he would be fine even if there is, short-term volatility in your portfolio, and you're ready to hold that because this is not really your, you still get your salary or your regular income. On the other side, somebody who's at 60 years of age or in your as a senior citizen, it's very important that you're able to get some income on a regular basis, and you're not ready to tolerate any volatility even for a month or 2 months, right? And that is the time you may have to construct portfolios where equity portions are much lesser. But what one has to take into account is that it's not that you need 100% of money at all points of time. And that is where I spoke about, consulting an advisor, doing an asset allocation, where depending on what you would require in shorter term on basis your goals, you would allocate into multiple asset classes. Now, people have invested right from crypto on one side, which is at the highest level of risk, to then pure, government bank fixed deposits, which is at the lowest levels of risk because there's a sovereign guarantee which is there in something like this. But then your returns are also a function of the same thing. So it's for each person, risk is defined by what their requirements are, what their goals are in the short run as well as the long run. And there are many, many models available today which can help you translate that risk into what your asset allocation and portfolio should be.
It's clear from our conversation now that sitting on money in savings bank accounts as well as fixed deposits just doesn't cut it. It doesn't even beat basic inflation. But the other end of the spectrum, I also see people obsessing about their portfolio. My question to you is, does it make sense for investors to rebalance their portfolio occasionally? And if so, if they were to rebalance or look at it occasionally, are there any benefits to that?
Sure. So it's a very valid point in terms of, how do you actually look in terms of, what is, so, the rebalancing of portfolios or doing reviews of your portfolio at certain frequencies is always an important thing. One of the things, when you look at your portfolios is, do you have an investment portfolio or a trading portfolio, right? And the two things are very different. Sometimes people do confuse in the two things. When you created a proper investment portfolio, you would have a time horizon of 3 years, 5 years, 10 years, 15 years, right? Depending on what your goals are. And trying to go and look at it on a month-on-month basis and feeling elated or depressed about it is not going to help the cause, because there will be volatility, specifically when you get into equity offerings which are there. The ideal frequency at which one should really look in terms of reviewing portfolios is typically, we've seen large family offices do it at 3 months, and the more, regular individual retail investor actually look at it from an year-to-year basis. Similarly, on balancing, unless there are some, so what you do is typically, let's say if you have a balanced portfolio and say you have 40% equity, 40% debt, and 10 to 15% in gold, and another 5-10% in cash. Unless there's a large variation, you would not really tend to rebalance, because there are transaction and tax incidences every time when you try and do that. And some of these asset classes do revert back to their levels over a slightly longer frequency. So plus minus 10% typically is not worth doing it. But if there is something significantly higher than that, then one would do it. However, there's an exception. So a scenario like today, right, where you've seen sharp correction in indices and a sharper correction in your portfolio, because the portfolios have actually fallen a lot more than the benchmarks also. So if you've suddenly seen a 15, 20, 25% drawdown in portfolios, then it's a great time to reallocate, let's say, to the growth asset, to an equity asset class, and balance, and add that type of exposure. So I guess that's the approach Hrishi K one would use in trying to do this.
This is very important. The WhiteOak Capital FlexiCap Fund NFO launches tomorrow, Tuesday, the 12th of July. It's an open-ended dynamic equity scheme. It will invest across large cap, mid cap, and small cap stocks. NFO closes 26th of July. Visit mf.whiteoakamc.com. I repeat, mf.whiteoakamc.com. That's mf.whiteoakamc.com, or call your mutual fund advisor right away. And remember, mutual fund investments are subject to market risk. Please speak to your mutual fund advisor before investing in any fund. So how's the golf looking like? What's your handicap? And is it the Willingdon or the Chembur golf club that you play at?
The Chembur is my home club, but the type of travel I do end up playing across the country. I've been enjoying my golf, Hrishi K. I've playing to a 14 right now. Have got a lot of friends across the country. So whenever I'm traveling across to Bangalore, Delhi, some of the other cities, we've got great. Getting into a great weather now. Summers are going to close, so hopefully we'll be able to do, between my NFOs, I will be able to play a little bit more golf.
Yeah, Delhi has the Delhi Golf Club, and of course, Calcutta has the Royal Calcutta Golf Club.
Oh, lovely place. Absolutely beautiful.
Beautiful. And where do you play in Bangalore when you go?
So Bangalore, I'm a member at the KGA now. I just got my membership this year after a 14-year wait. So I'm like really excited about that.
And we always ask our business leaders what kind of music they listen to. What's on your phone, Prateek? And what is your playlist like?
So, my playlist is determined by my daughter nowadays. She's turned 18. So whether it's K-pop, whether it's, some of the stuff which I love while running. So it's a little bit of mix of retro plus extreme new stuff. So honestly, it's nothing fixed right now. It's more dynamic, determined by what trends are coming through.
Well, you're certainly up with the times. K-pop is the in thing. Wonderful. That's Prateek Pant, Chief Business Officer at WhiteOak Capital Management. Thanks very much, and look forward to seeing you very soon. Bye-bye.
Bye. Thanks a lot, Hrishi.
One world, your station.